For the final trade of the day, Mike Patton, head trader at Thunder Trading, is with us now for a look at a TV and film stock.
Well, I have Warner Brothers Discovery Incorporated. Long name, symbol is WB as in boy, D as in David. This is a stock that's been down quite a bit. If you look at it on a chart, it's been declining probably for the last 3 years. So you might be wondering why I look at it now. Well, it has improving fundamentals, and I usually love looking for stocks like this that seem to be undervalued by the market, but have really strong potential upside. Looking at the stock right now, it's trading just below $9 a share, like around $8.50 a share. But I do think that it's way below, or well below its fair value. I do think the stock should be above $9 a share. And I do see upside potential to at least $13 a share, maybe as high as 20, but let's just say 13 to be more conservative. Main reasons I think it could show some improvements. If you look at its profitability, it's been improving dramatically over the last few years. So they're right now getting to the point where we can see their profit margins are starting to swing back into the positive direction. So it looks like they're making good traction. And I do think that they should see some upward growth. So I just think the stock is undervalued right now by the market, but it does show a lot of good potential to the upside. So this one looks like a good bargain. But in the event that this doesn't go the way we want, the downside is fairly limited. But I would say if the stock is trading down to about $7.60 a share, maybe a little lower than that, I would say that would eliminate the bull case and it would be time to exit. But that basically means we have about 70 cents of downside and we have several dollars of upside potential. So that doesn't look too bad at all.
Mike, what do you think about the overall condition of the stock market?
Just keep an eye on the Fed. Obviously, they're making it seem like they may not lower rates this year, although half the time they're saying they will, half the time they're saying they won't. So the markets are obviously very jittery about that. So I think that's going to be the big focus. And then after that, that's just set the tone for the rest of the year where stocks end up going.
JP Morgan beat expectations. That bank brought in $42.5 billion. That is one of the stocks you picked on our show. Have you changed your outlook?
So at this stage, I would say that your upside still looks like it may top out at this stage at around 197, somewhere around there. That's probably about as far as we can expect it to go. And it's already been pretty close to that number. If I'm correct, it went just above that to 203. So I think we actually are at the topping out point for JP Morgan. It doesn't mean that it's going to come down, but I would just say I don't think it's a time to be adding that stock into your portfolio if you hadn't already. We did give the alert out a long time ago.
Thank you for tracking your trade, Mike. Happy Tax Day.
I'm going to pay my taxes. All right.
Go to businessfirstam.com for where to see our show on TV.